Hey traders, Raghi here, and in this update, it has begun. What do I mean? What is it? When we take a look at what's happening in the indices, what we are starting to see is not an uptrend. Let's not get ahead of ourselves. Let's not front run the process. Let's not start to think we can predict where the market is going. We want to look at what's happening and make an assessment. So there's really three prongs to this. One, what's the structure of the indices? Well, that's pretty easy. Save the S&P, Nas, Dow, and even the Russell have segued into very fresh but neutral market trends, which means the previous downtrend is taking a bit of a breather. This doesn't mean the downtrend is over. I mean, we've seen neutral markets before, and then the downtrend began again. So what makes this time different? We'll get to that in a moment. But just remember, the indices are in neutral trends. Gold is another interesting market. Yes, I want to short the rip in gold. If we move up to about 1815 on the August gold contract, would love to take advantage of a short there. If we get it even to 1780, I would look at perhaps an aggressive long puts, MGC, micro gold. We want to be short. But think about what gold is telling us. Not to get too into it, but remember, gold is not a flight to safety. Gold is not a market that sells off when the equity markets are rallying and vice versa. That's what a lot of people think. Gold is actually an inverse or opposite direction reaction to real yields. Well, what the heck are real yields? The nominal yield of a bond. Now remember, the Fed is hiking rates. So what's happening to bond rates? They're going up, right? So this yield of a bond, which is moving higher, and the rate of inflation, which I'll show you in just a little bit, is actually starting to peak finally and move sideways. We're not guessing at a peak, gang. We're not front running. We're looking at the data and we're connecting the dots. So if gold is moving lower, that means real yields are moving higher, which means rates are moving higher, which we know, and inflation is leveling out. Remember, inflation is the arch nemesis of the Federal Reserve. So again, what do we know so far? Indices are starting to go neutral while inflation is starting to flatten out, and we can see the price action evidence in higher bond yields and lower gold. We're always looking for evidence. The next thing we want to take a look at is crude oil. Gang, there are two commodities that I have called the canary in a coal mine. Is there a trade here? Yes. We want to get long crude. Crude is not in a downtrend. It had a number of down days, but it doesn't mean down days equate to a downtrend. The area between approximately $100 a barrel and $95 a barrel is looking oversold. Look to the right here and you'll look at a weekly chart of crude oil. This is a better chart if you're looking at the macroeconomic impact of the uptrend in crude. By the way, the weekly is absolutely in an uptrend, and it's been in an uptrend, as you can see, since early part of 2021. So this is a 2-year uptrend. Well, year and a half uptrend. One down week doesn't undo the uptrend. It has not yet. And it certainly has not turned into a downtrend. Commodities like crude are still moving higher. So this is not a time to be all down on the economy. This is not time to let the conversation around recession brainwash you into panic. Remember, gang, recession, that conversation happens only on television, right? It's not something we as traders or investors can trade around. We don't even want to trade this word. It's just a concept, right? Behind the concept is whether or not we're truly seeing an economic slowdown. Well, you might say, okay, Rod, what's going on with copper? It is moving lower, but take a look. Is the move done? The weekly sure seems to think we're in the beginning of a reaction at the 200 propulsion with, take a look at that wick. Talk about a rejection of lower lows and the magnetism of this 200. That's the way that thing works. If copper is going to sit now at an oversold support level and crude oil is at an oversold support level, the downtrend in the indices are starting to level off, all of a sudden, gang, the bottoming process has begun. And not because we're guessing at it, but because we can see it in the data. All right, here we're just going to bring it on home here with a look at the target rate probabilities. What is it that we're all afraid of? Higher rates. What do we know we're finally seeing? A topping of the rates. Not that we're done hiking, but that the Federal Reserve seems to be on a path to a 3.25 to 3.75 area in terms of where they're going to hike to and stop. We can see this when we look at the November, December Fed Fund futures. You go out into March, you go out into May of next year, we're still sitting at the level that we reach in December. In other words, by December, we've hit what seems to be right now the target rate that the Federal Reserve is going for, and then we're leveling off. Doesn't mean that can't change, but if this holds, this is really important. If this holds, gang, for all those other reasons and those other, 6 charts that I showed you, the bottoming process has begun. And this is a process, right? We don't want to guess at this. This is the kind of thing that we do with futures in the futures room. And this is the kind of thing that I do with futures and with macroeconomics and the Sector Secrets Mastery. This is what I'm telling those folks right now. This is what I would love for you to know, and start thinking about how you can look to the long side in any one of these charts except for gold and for bonds. So start looking at indices. It's time to start getting bullish. We'll talk more about this in upcoming sessions. And also in my live trading, we're going to be doing some day trading. Where does day trading fit in all this? You can still join me. Head on over to simplertrading.com/guide pro. So there's a link, simplertrading.com/guide pro, because as this bottoming process is happening long term, I'm not sitting around twiddling my thumbs. We are day trading in this environment. And if you haven't had a chance to check out and trade using volatility levels, if you haven't been able to look at time and volatility and our HPMRs, this is definitely the time to start thinking about day trading while we're in the midst of this bottoming process, which could be pretty volatile. Volatility is a day trader's best friend. So there's a lot of things we can do in this environment. So looking forward to seeing you in live trading starting tomorrow, 9:20, actually 8:20, because we're going to trade non-farm payroll. So it's not too late to join me for the live trading. And I will see you all in the next update. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.